Hello everyone, I hope you guys are having a wonderful day. My name's Vicky and we're going to be doing some analysis here. We're going to be covering the markets, and right now, boy oh boy, did we get a down day in the final hours of the trading day. Pretty significant down day, I should say, as well. Down 1.39%, 1.49% on the triple Qs, 2.31% the IWM, and 1.25% in the Dow Jones. And again, lots of people coming out for another generational buying opportunity. But again, so I'll be covering the bullish side and the bearish side as per usual, because right now there's all sorts of stuff going on Twitter, FinTwit, and everyone's saying this is the crash, it's starting, or is it the beginning of a pullback for a bigger leg higher, right? So right now, if we take a look, we'll start off by taking a look at market cipher, right? We'll start off with the larger time frames, and as you guys can probably see, we have increasing green money flow on the weekly time frame. The monthly time frame has also shifted to bullish now, right? So it's showing that this is still potentially an extended B wave, and then come back down in a C leg. But when you look at the momentum waves, they're increasing, they're expanding. You have increasing green money flow, and you got a green dot here in the month of I believe. Also, we're actually getting a green dot right now in the month of December. So if this confirms in the next 8 days, we should have significant more upside coming in the coming months, right? So this dip that we're getting could be a very big buying opportunity, and I will potentially myself be looking to long if we get to these levels here, right around 45. Sorry, 455 on the SPY, or 460 on the SPY. So, but yeah, let's take a look at the weekly, right? So again, weekly is showing that we could potentially extend to the 500 levels as high as the 600s, right? I have my target here. I have my target here right around 540 to 510. And again, this should keep playing out as long as nothing really bad happens in the economy. We have been getting a very big pump in the last couple of weeks. I should say more than a couple of weeks. Last month and a half, I should say, right? If we look at the weekly candles here, if you count how many up weeks we've had in a row, we just zoom in. 1, 2, 3, 4, 5, 6, 7, right, in a row, and this would be making the 8th. If we manage to pump back up in the next 2 days, then you could technically close another green candle. But right now, it's shaping like a very nice little topping tail at the moment. But let's get back to looking at market cipher. So again, it's showing that we could potentially be topping out here with the red dot on the momentum waves and on market cipher as well. So if we start to come back down, my levels to watch would be a retest of this down sloping trend line. We'll actually have to see how this lines up with our fib. So we actually draw a fib from the highs to the lows here, and you might be coming back down to either the 460 area, so 459.75 cents, or as low as the 450 area. But this could be a wick, right? So if you wick and you get a daily close back above here, everything should be fine. But if you start getting lots of daily closes below this downsloping trend line, you have to factor in that the top might be in, and we have maybe just put in a top in the B wave, and we could start to come back down in a significant fashion, right? So again, there's lots of possibilities in these markets. That's why we got to explore all of them. But right now, I'd be focusing on an ABC correction here, something like this, and then we could start to come back down, and slowly but surely, and then hold this level as support, and then continue the uptrend with a very parabolic wave 3, right? But then again, this is not to say that I'm ultra bullish on the economy and ultra bullish on the market, and that we're just going to keep going up forever. No, I'm in fact very bearish on the economy and very bearish on the markets, right? But there's no sense in fighting a trend that is so strong, right? Once we get to these levels, we will surely most likely have a very big crash, or a very big pullback in the markets. You just have to look at the fundamentals, where rates are, and the reason the markets actually went down so much today was because of the bond auction that went so poorly. And surprisingly, when a bond auction goes poorly, you actually see yields spiking. But today, funny enough, for some reason, the yields fell as the bond auction went poorly, right? So when the bond auction goes poorly, it means that the issuer, which is the treasury, has to offer a higher yield in order to entice the buyer, right? But I don't know what happened today, but the yields fell while the auction went poorly. So again, it's a little bit counterintuitive. But anyways, I'm not going to get into too much details. You guys can look at the data yourselves. We could take a look at wave edge here on the daily time frame for the SPY. You can see we actually had a significant down day as well, followed with a lot of institutional selling. We actually had a nice little overbought condition here as well on wave edge X. And then we'll take a look at some smaller time frames as well, like the 4-hour, significant amounts of selling, and the 1-hour as well, significant amount of selling. But again, it's not to say that this is over, right? This can continue on to, like I said, the 450 to 460 area, which would be, your chance to potentially get into a long position, to long the bounce back up. But again, remember to set a tight stop on this, because this can really start to get out of hand very quickly, right? If the markets are really topping out here and we start to unravel, then again, this can completely just fall apart and start to break back down. All these levels, all these gaps that we've created will fill, right? So this is something important to note and to remember at all times. But overall, it was just some bad news today. Plus, FedEx had some pretty bad news as well, and their earnings went down. That kind of just added on top of the bad bond auction. All right, let's move on. Let's take a look at some individual names. Finally, we'll take a look. We'll start off with Starbucks here. So Starbucks actually, you know what, came down pretty significantly and extended the wave one lower, which is quite unfortunate, right? So again, if I was long right now and I was, I entered here, I'd either stop out or I would start to look for another possibility of where we are going. You could be creating bullish divergence here. On the 4-hour, we'll take a look at the daily. Daily could actually go a little bit lower, right? So again, you actually have a gap fill all the way down here and down here at 91. So actually this can extend a little bit lower. So this bullish case that I was focusing on has failed, and now we need to look at a bigger pattern. So let me just come back here. And it's also possible that maybe the wave 2 is already finished here, which would mean this was a very small ABC, which I don't like, because the C wave is so small and I can't make 5 waves up. But if we're really forcing things, then this means that this is in, and you are now starting the third wave, which is a 3 of 3, which is a crash wave, and then this will also come in a 5 wave move, right? So something like that. Right, so a 3 of a 3 of a 3. But overall, this doesn't have to be so bad. It could actually still just be in 1, and this just was a very big. Wave 4 of your wave 1. So if you're, but to be honest, I could already make 5 waves up, 5 waves out of here. So to be honest, I would focus maybe on a more bearish and sinister scenario. But if we are really forcing the bullish scenario, let's take a look here. We'll just try to make 1, 2. Let's say this is 3, right? And this was 4. Now you're in 5. And where the 5 could end, let's just take a look. Let's see where the 5 could end. We'll just delete this just for now. And it's 1, 2, 3, 4, 5. I could already make 4 here, but we'll just say 4 is here. And for the sake of it, let's see where it could go. So it could actually extend a fair bit lower, down to the 100%. So it could extend as low as 89 to 86. But I to be honest, there's just so much support here. And I really don't see that happening. But if you really want to, you can look for those levels for buying opportunities if we do get down that low. But this would mean that the markets would retrace significantly more. But I don't see that happening too much. We could take a look at Starbucks on wave edge very quickly. The daily time frame. So you got those green crosses. Unfortunately, they didn't play out. 4-hour time frame. You're actually getting liquidation levels now in the 1 hour. So you got all this accumulation. They haven't distributed yet. So I would say that this is just maybe, you know, just emotions coming into here. So if you're not in already in a long position on Starbucks, this might be a nice little opportunity. But don't quote me on that. All right, let's move on here. I think we focused enough on Starbucks for now. We'll take a look at Roku. Roku continues the downtrend here. Not surprising. Could the B wave be already in? Yeah, it could be, maybe, right? You could technically say that you're in C now. This was the fifth, and this was your A, an overshooting B wave, right? And then in a C. So you could say that, but for the time being, you could even say that this was your A, and this was your B. Oops, move that back. This was your B here, and now you're in C, right? Or you're still in A. But right now, let me see if we can make 5 waves out of the wave, the first wave. So let me just see of our retrace. So 1, 2, 3, 4, 5. You should be actually, yeah, this, you're probably still in wave A. You're probably finishing up wave A here on the shorter time frames, and this could finish at any moment, and you'll get a bit of a significant bounce. But wave 5 can extend, right? We've seen wave 5s extend and extend and extend, like this one, right? This wave 5 extended, it kept extending, it kept extending. So this wave 5 can technically keep extending and keep extending and keep extending. All right, so that's basically your count for now. You should be coming back up in a B, but the B might not be as big as everyone thinks. All right, so that's Roku for you, and I'm still in a short position on this one. I actually shorted right around the 106 to 105 area. Now it's at 89. I'm still holding my short because I do believe this will go lower. All right, so it looks like tech got slaughtered today. We'll take a look at NVIDIA. NVIDIA looks like it has begun hit its wave 3 here. So this should be putting a significant top. And I actually mentioned this many times and over again that we're just probably in an extended 5th wave. And it has finished now. You could be in the beginning of wave 1, 2, 3, and a 4, which would be very bearish, right? Because now you're really starting to move down, and especially from such an overbought condition as well. So, all right, yeah. I mean, I don't really have much bullishness to spread around today, especially in such a down market and an overextended market, right? I can't go out here and be like, yeah, you know, it's a great buying opportunity here. Just looking at the wave count, we need to come back lower. All right, that's enough. That's enough for now. Let's take a look maybe at one more stock. We will take a look here at PayPal. We'll finish it up with PayPal. Why not? PayPal was down today as well. Not too surprising. It is actually holding this previous sell area as support for the time being. If it starts to break back lower, you've put in a significant top in wave 4, and this is now finished, and you are going to come back down significantly and potentially back down to the $47 to $45 levels. All right, so that's it for now. Oil actually extended the C wave just a bit more, retested this level as resistance, tagging the 200-day moving average on the 4-hour time frame, and holding it as resistance for now. If we do come back up, I might even consider this a potential shorting opportunity. If we could get back up to the $75 to $75.50 level, I might consider that a short, and then we could come back down in a 5-wave move in a three leg. Okay. So yeah, that's basically it. It's a very risky market to be going all in on now. Especially with us being so overextended. The VIX got a very nice spike up today, and it did manage to hold its gains. So we'll have to see if the VIX continues to spike up. You could tell the UVIX was up 12% today, right? So a very big move in the UVIX, and this is not too surprising, right? We've been covering on this channel how much accumulation has been going on, especially on the shorter term time frames on these risk management products, right? So hedge funds, big money will start to buy these products when they see imminent risk in the market, especially in a big move where there's so much low volatility and everyone's getting on the same side of the trade. You see them buying these products, right? And now you've gotten your move. This move can continue, but these are short-term trading products, which means down days on the market don't last too long, right? You could see sometimes we can go in a period where we get a significant amount of selling, but when it ends, we get a big relief rally, right? So now we may get some selling in the coming weeks down to maybe 450, 460, and then at that point, I would be looking for a longing opportunity to potentially to new all-time highs, right? And this doesn't mean that I'm bullish on the economy or anything, but the markets can stay irrational for a very long time before finally, everything clicks in and then it's Armageddon, right? Anyways, that's it for now. Hopefully you guys enjoyed this video. Feel free to like and subscribe. Love you all. Peace.